Grewe. You are partner banking and capital markets at BearingPoint. Let's talk about Bitcoin first. Are cryptocurrencies a real threat to national currencies?
The interesting thing about Bitcoin is actually that it's probably the first and meanwhile longest proof of concept, or gives proof that the blockchain technology can work. Personally, I'm not convinced whether we need another currency apart from the national ones we already have, but obviously yes, Bitcoin is being used for payments via the net and, for example, for software purchases, etc., etc. So there are use cases, but my personal opinion is that the underlying technology, blockchain technology, is far more attractive or far more worthwhile to look into that one.
So what is the really big innovation of blockchain technology?
We have the Internet of Information today. So you have ones and zeros transporting content, but not the ownership level or the payment level. And with blockchain, you unite this. So you basically create an Internet of value in one go. And that, of course, is quite compelling compared to today's life, where we have the information flowing on one level and then payments and ownership levels being organized on another level. And currently we have mediators, intermediaries, organizing all this, stock exchanges, banks, etc. And with blockchain, we don't necessarily need those anymore, so that can be quite revolutionary.
Banks want to use the technology for themselves now, but the first concept foresaw the elimination of institutions like banks. So does this represent a contradiction?
To a certain extent, of course, yes. Because blockchain aims at eliminating all the intermediaries. Nonetheless, as banks do have certain competencies and capacities and are quite good in doing certain sorts of business which have not been adapted by the wider blockchain community, trade finance, large infrastructure financing, multi-million syndications, etc., banks do have a juicy bit of business on their side where it might be very worthwhile setting up a blockchain environment.
Banks are currently less interested in open blockchains like the ones for Bitcoin or Ethereum. They build their own blockchains, closed blockchains and consortia. What does that mean?
I think it's quite understandable that they're going for private or permissioned blockchains. It might be similar to the internet. When the internet came to be, it was tried and tested within corporate circumference first, like an intranet, and then it went out to the wider public. Banks also have quite some performance, high frequency trading. You need instantaneous or millisecond transactions, which is not always possible with a public blockchain where you have an unlimited number of miners or validators. And if you limit this, for example, in a private context, and you achieve or set up a consensus rule which allows to reach consensus in a quicker way, this might very well be appealing for banks. And of course, you know who's within this private blockchain. It might even be the regulator.
Authorities and regulations are important factors. Can we divide the whole blockchain space into regulated blockchains and non-regulated blockchains? And arises there a potential combat zone between the two?
Well, in principle, yes, it is thinkable. I don't think these setups exist currently. But yes, as long as we have regulatory requirements, the necessity to bring the regulator on board for certain, because it's just legally required outside of the blockchain arena. It might even be an idea to bring the regulator on board and become one of the miners or the validation nodes to allow the regulator to have a certain amount of transparency, which again, private clients might not want, but yes, this is thinkable compared to the completely open public blockchains as they exist today without regulatory influence, etc. So yes, this might become true, but I don't think this will be a very controversial situation because the use cases that will be covered by the public versus the private blockchains I would assume these to differ.
As to money laundering and consumer protection, should the regulator get involved more than today, or should he just sidestep a little bit for the moment?
If we look at the Swiss money laundering regulations, and the EU is going into the same direction with its fourth money laundering directive, they are pushing, the regulators pushing to have transparency on the identity of the participants, and that fraudulent or potentially fraudulent activities can be reported. So we're not going to have the regulator off our backs that easily, as long as the legislative surrounding in which we work stays as it is.
Blockchains are a property register. Are there already promising projects for different use cases than currencies?
There has been a project, for example, in Honduras for several years, because yes, they did have issues with registering property in an adequate way. Of course, you never know, if a terrorist organization comes up and, forces you off your land, the blockchain won't help. But in principle, it's a good idea to use the blockchain technology, especially in geographies where there are no established systems or not a lot of political stability, or that ownership rights are not respected in a way we know it. But even this said, in Sweden is running a project to lift the property registry onto blockchain. And this is within a democratic, established, and politically stable country. So yes, there are use cases. Another interesting one is Everledger. It's a diamond ledger or registry or database which records the ownership levels as regards the diamonds. The light spectrum which each diamond has is quite individual and makes the stone unique, and then you can connect it with the contract. So there are concepts into that direction that already work, yeah.
Blockchain technologies promises efficiency gains. What about the banks, the notaries? Should they be scared right now?
As long as the legal requirements call for physical signatures, stamps, etc., there's not a lot that's going to happen. But I believe that within the course of time, these things will change, and as soon as an automated or electronic signature is sufficient, the notaries might have an issue if they don't reinvent themselves. For banks, likewise, they earn money being the mediator, in the intermediary in the process. If this business is reduced, banks should, on the other hand, also, or in parallel, look into streamlining their operations and IT setups, because if you move this to blockchain, you save on reconciliation effort. And of course, this requires an investment. But if you do this investment, in the long run, you are more efficient with your operations. So that could be something for banks to look into. It's not an easy one, but it might be very valid.
The economy of blockchains is very complex. Almost every week there are innovations. How should a company keep up? Quite difficult. We experience that ourselves because we monitor the market now and then, of course, and we ourselves are looking into a solution, web crawling for certain content, enhancing this in an analytical way, and then providing this information back to the market. So yes, it is advisable if you don't want to do it yourself, to reach out to someone who has such an offer, market screening offer at hand. But it's a difficult one, and yes, it's a very dynamic environment. So you always have to keep at it. If you gaze into the future, will blockchains affect our daily lives, or are we just witnessing a big hype? I think it does have the potential to allow every one of us participate in the efficiency effects, or shifting of value, or even wealth or prosperity to a certain extent, because in the moment you eliminate the intermediaries, of course, and you have more direct access to services, solutions, products,
it becomes cheaper for you to acquire these. For example, there's Abra. It's for money paying and telling, comparable to Western Union, etc., etc. If you eliminate Western Union, and the Abra concept basically copies Uber for payments. So you pay something in, and then the teller, there are persons or people who register as tellers, and if you want to collect your money, you just look, is there a teller near me who might have a 5-star rating? So I click on him and get the money delivered. And of course, this the amount I have to pay for this service is lower compared to the regular Western Union fare. So this allows everybody to participate if you think in these environments or networks. Similar to music or even journalistic content. If that's posted somewhere and everybody uses it and you never have anything of it, or you write a nice piece of music and everybody just downloads it, you don't earn any money. But if you put this on the blockchain, of course you could, as a journalist, you could immediately participate in earning related to whoever uses, downloads, and copies, etc., your content.
Thank you, Mrs. Grewe.
Thank you.